Based on the historical data and forecast, Bitcoin has experienced significant volatility recently, with support at 109,800 and resistance around 112,500. The RSI fluctuates between 37.7 and 51.4, indicating periods of both oversold and overbought conditions. Bollinger Bands show a narrowing range recently, suggesting potential for a breakout. The forecast data indicates a sideways trend with prices hovering around 111,500 to 112,200. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands for optimal returns. First, we will implement an RSI-based strategy. When the RSI falls below 20, oversold, we will enter a long position at 108900, set a stop loss at 108,000, and target a price of 112,000. Second, we will use the Bollinger Bands to confirm the trend. When the price touches the lower band, we will enter a long position at 111000, set a stop loss at 110,000, and target a price of 112,000. Finally, we will combine the two strategies to create a portfolio. If the RSI is below 20 and the price is near the lower Bollinger Band, we will enter a long position at 108900, set a stop loss at 108,000, and target a price of 112,000. This combined approach aims to capitalize on both oversold conditions and potential breakouts, maximizing returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a volatile trend with periods of both consolidation and significant price swings. The RSI consistently fluctuates around the 60 to 70 range, indicating neither strong overbought nor oversold conditions for most of the period. The Bollinger Bands have widened recently, suggesting increased volatility. Considering the forecast for the next week, with prices hovering around $4,530 to $4,630, I propose a moderately bullish strategy. We will initiate a long position at $4,530, placing a stop-loss order at $4,370, which aligns with the established support level. The initial target price will be $4,620, aiming to capture a quick profit from the anticipated upward movement. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 30, indicating an oversold condition, we will enter a long position at the prevailing price, setting a stop loss at $4,370 and a target price at $4,630. Conversely, if the RSI exceeds 75, signaling an overbought condition, we will consider a short position with a stop loss at $4,880 and a target price at $4,530. The portfolio will prioritize the moderately bullish strategy with a long position at $4,530, adjusting based on RSI signals to maximize returns while managing risk effectively. Based on the historical data and forecast, XRP has exhibited volatility, fluctuating between a support price of $2.86 and a resistance price of $3.05. The RSI has mostly remained within the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a potential downward trend, with prices hovering around $292 to $299. Considering this, I propose a cautious strategy focused on short-term gains with tight stop-loss orders. We will implement an RSI-based strategy, targeting oversold conditions. When the RSI dips below 20, we will enter a long position at $2.92. The stop loss will be set at $2.86, just below the established support level, to limit potential losses. The initial target price will be $3.05, the resistance level. To further refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $2.81, it signals a potential oversold condition, triggering a long entry at $2.81. The stop loss will be placed at $2.77, slightly below the lower band. The target price will be the upper band of $3.3. This combined strategy prioritizes risk management with tight stop-loss orders while aiming to capitalize on short-term price movements. The portfolio will primarily focus on the RSI strategy, with a secondary consideration of the Bollinger Bands for additional confirmation. This approach balances potential gains with minimized risk, aligning with a high-returns investment expert's philosophy. Based on the historical data and forecast, BNB shows a generally upward trend, fluctuating within the support of $847 and resistance of $880. The RSI indicates periods of oversold and overbought conditions, with recent values hovering around the 53 to 68 range, suggesting potential for both buying and selling opportunities. The Bollinger Bands show that the price has been fluctuating around the upper band, indicating a bullish momentum. Considering these factors, I recommend a long position strategy with an entry price of $876. The stop loss should be set at $847, just below the support level, to protect against potential downside risks. The initial target price should be $889, aligning with the forecast and the upper Bollinger Band. To optimize the portfolio, I propose a layered approach. Initially, enter a long position at $876 with a stop loss at $847 and a target price of $889. If the price reaches $889, consider taking partial profits and moving the stop loss to the entry price of $876 to secure gains and protect against a potential reversal. If the price continues to rise, set a second target price of $888 and adjust the stop loss accordingly. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a generally upward trend, supported by the consistent breaching of the $200 support level and the forecast prices consistently above this mark. The RSI fluctuates between 48 and 63, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been moving around the center line, and the recent price is approaching the upper band. Therefore, I recommend a long position strategy. We will enter a long position when the RSI drops below 20, and we will exit when the RSI reaches 80. The entry price will be $187, with a stop loss set at $182 to mitigate potential losses if the price reverses. The initial target price will be $203, aiming to capture a significant portion of the anticipated upward movement. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating strong momentum, we'll adjust the target price to $209. Conversely, if the price touches the lower Bollinger Band, we'll tighten the stop loss to $177. This dynamic approach allows us to adapt to changing market conditions and maximize potential returns while minimizing risk. This portfolio combines RSI and Bollinger Bands to create the most efficient strategy. Based on the historical data and forecast, Dogecoin shows a sideways trend with fluctuating volatility. The RSI readings have mostly stayed between 45 and 57, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have widened recently, suggesting increased volatility. Considering the support price of 0.223 and resistance price of 0.236, I propose a range-bound strategy focusing on short-term price swings. We will implement a combined strategy using RSI and Bollinger Bands. First, we will initiate a long position when the price touches the lower Bollinger Band and the RSI falls below 40. The entry price will be $0.217. A stop loss will be placed just below the support price at $0.21. The target price will be set at the resistance price of $0.236. If the RSI reaches 80 while in the position, we will exit the trade and secure profits. Conversely, if the price touches the upper Bollinger Band and the RSI exceeds 70, we will take a short position with an entry price of $0.226, a stop loss at $0.23, and a target price of $0.218. This combined strategy aims to capitalize on the sideways trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, TRON shows a slight downward trend with support at $0.341 and resistance at $0.362. The RSI fluctuates between 48.0 and 70.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Given the forecast prices are consistently around $0.347 to $0.353, a conservative strategy is warranted. I recommend a long position when the RSI falls below 30, indicating an oversold condition. The entry price should be $0.343, with a stop loss placed just below the support level at $0.338. The target price should be set near the resistance level at $0.355, aiming for a modest profit. To refine the strategy, we can incorporate the Bollinger Bands. A long position can be initiated when the price touches the lower band and the RSI is below 30. The entry price would be $0.343. The stop loss should be set slightly below the lower band at $0.335 to account for potential price fluctuations. The target price should be set at the middle band, $0.351. This approach combines the RSI's oversold signal with the Bollinger Band's volatility indication, providing a more robust risk management framework. This portfolio combines both strategies to achieve a balance between risk and return. The final strategy is to enter at $0.343, set a stop loss at $0.335 and target $0.351. Based on the historical data and forecast, Cardano shows a mixed trend with periods of consolidation and minor upward movement. The RSI indicates that the asset has been fluctuating between oversold and overbought levels, suggesting potential for both upward and downward price movements. Considering the support price of $0.837 and the resistance price of $0.914, a strategy focusing on short-term swings within this range is recommended. I propose a combined strategy utilizing RSI and Bollinger Bands. The entry price will be $0.86, coinciding with a bounce from the lower Bollinger Band and an RSI reading below 50, indicating a potential oversold condition. The stop loss will be set at $0.837, just below the support level, to protect against unexpected downside breaks. The initial target price will be $0.914, the resistance level, offering a potential profit of $0.054. To refine the strategy, we will incorporate the RSI and Bollinger Bands. If the price reaches the resistance level, we will adjust the target price to $0.934, the upper Bollinger Band, for a potential profit of $0.074. Conversely, if the RSI approaches 80, indicating overbought conditions, we will consider taking profits or implementing a short position. The forecast data suggests a relatively stable price range around $0.878 to $0.866, further supporting a cautious, swing trading approach. Therefore, the portfolio will prioritize short-term gains within the established support and resistance levels, with dynamic adjustments based on technical indicators. Based on the historical data and forecast, Chainlink exhibits a generally upward trend, with recent fluctuations. The RSI values have been oscillating, indicating periods of both overbought and oversold conditions, but generally above 50, suggesting a bullish momentum. The Bollinger Bands show that the price has been approaching the upper band in recent days, indicating potential overbought conditions. Considering these factors, I propose a strategy combining RSI and Bollinger Bands for optimal returns. I recommend a long position entry at $25.5, coinciding with the first day of the forecast period and a slight pullback from recent highs. The stop loss should be set at $23.9, aligning with the established support level, to mitigate potential losses. The initial target price is $26.1, a conservative target based on the forecast and the proximity to the upper Bollinger Band. If the price breaks through $26.1, a trailing stop loss can be implemented, following the 20-day moving average, to capture further gains. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH demonstrates a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates, indicating indecision within the market. Considering the recent price action, the support level at $4,710 and the resistance at $5,140, I recommend a long position strategy. The forecast for the next week shows prices ranging from $48.80 to $50.20, suggesting a potential upward trend. The RSI values are generally below 80, indicating that the asset is not currently overbought. We will enter a long position when the price touches the support level of $4,710. The stop loss will be set slightly below the support at $4,600 to protect against unexpected dips. The initial target price will be the resistance level at $5,140, aiming for a significant profit. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, reinforcing the entry point at $4,710. The upper band provides a secondary target price. If the price reaches the upper band, around $5,250, we will consider taking partial profits while maintaining a portion of the position to capitalize on further upside potential. The combined RSI and Bollinger Band strategy offers a balanced approach, utilizing both momentum and volatility indicators to maximize returns while managing risk effectively. This strategy aims for an entry price of $4,710, a stop loss at $4,600, and an initial target price of $5,140, with a potential secondary target of $5,250 based on the upper Bollinger Band. Based on the historical data and forecast, shows a fluctuating trend with a recent bounce from the support level of $3.54. The RSI has been oscillating, recently crossing 50, indicating a potential shift in momentum. The Bollinger Bands have been narrowing, suggesting a period of consolidation before a potential breakout. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position at $3.6, anticipating a continued upward trajectory based on the forecast and the recent price action. A stop loss will be set at $3.54, just below the support level, to mitigate potential losses if the price reverses. The initial target price will be $3.72, aligning with the forecast and the recent resistance level. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider adding to our position at $3.6. Conversely, if the price touches the lower Bollinger Band, it signals a potential buying opportunity at $3.54. If the price reaches $3.72, we will move our stop loss to the entry price of $3.6 to secure profits. If the price continues to rise and breaches the upper Bollinger Band, we will adjust the target price to $3.77, capitalizing on the upward momentum. This layered approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Optimism shows a mixed trend with periods of both upward and downward movement. The support price consistently holds at $0.686, while the resistance fluctuates around $0.811. The RSI values range between 45.3 and 58.0, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been oscillating within the bands, suggesting sideways movement. Considering this, I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term fluctuations. My strategy involves a combination of RSI and Bollinger Bands. When the price touches the bottom of the Bollinger Bands and the RSI is below 50, it signals a potential buying opportunity. For example, on August 28, 2025, the price was $0.736, the RSI was 50.5, and the bottom of the Bollinger Bands was $0.656. I recommend entering a long position at $0.686, setting a stop loss at $0.656, and targeting a price of $0.811. Conversely, when the price touches the top of the Bollinger Bands and the RSI is above 50, it signals a potential selling opportunity. If the price forecast dips below $0.7 on September 4, 2025, consider selling at $0.711, setting a stop loss at $0.731, and targeting a price of $0.686. This combined strategy aims to capture profits from short-term price swings while managing risk through stop-loss orders. Based on the historical data and forecast, Chainlink exhibits a generally upward trend, with recent fluctuations. The RSI values have been oscillating, indicating periods of both overbought and oversold conditions, but generally above 50, suggesting a bullish momentum. The Bollinger Bands show that the price has been approaching the upper band in recent days, indicating potential overbought conditions. Considering these factors, I propose a strategy combining RSI and Bollinger Bands for optimal returns. I recommend a long position entry at $25.5, coinciding with the first day of the forecast period and a slight pullback from recent highs. The stop loss should be set at $23.9, aligning with the established support level, to mitigate potential losses. The initial target price is $26.1, a conservative target based on the forecast and the proximity to the upper Bollinger Band. If the price breaks through $26.1, a trailing stop loss can be implemented, following the 20-day moving average, to capture further gains. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ether.fi has shown volatility with a general sideways trend. The support price consistently remains at $1.07, while the resistance fluctuates around $1.15. The RSI values hover around the 45 to 58 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting potential price breakouts. Considering these factors, a combined strategy utilizing RSI and Bollinger Bands is recommended. We will implement a strategy that looks for opportunities when the price touches the lower Bollinger Band and the RSI falls below 40, indicating a potential oversold condition. The entry price will be $1.04 when the price touches the lower Bollinger Band and the RSI falls below 40. The stop loss will be set just below the support level at $1.03 to limit potential losses. The initial target price will be $1.11, aiming for a quick profit as the price rebounds from the oversold territory. If the price reaches $1.11, we will reassess the situation. If the upward momentum continues, we can adjust the target price to $1.15, aiming to reach the resistance level. This combined strategy offers a balance between risk management and profit potential, capitalizing on short-term volatility while respecting established support and resistance levels. Based on the historical data and forecast, Cosmos Hub demonstrates a slightly upward trend with periods of volatility. The RSI consistently fluctuates around 50, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a potential for a mild increase in price over the next week. Considering the support price of $4.62 and resistance of $4.89, we can implement a combined strategy focusing on breakouts and RSI signals. I recommend a long position entry at $4.5, placing a stop-loss order at $4.4 to mitigate potential losses. The initial target price will be $4.7, aiming to capitalize on the forecasted upward movement and the resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, around $4.26, it signals a potential oversold condition, triggering a buy order at $4.3 with a stop loss at $4.2 and a target price of $4.5. Conversely, if the price approaches the upper band, around $4.94, it suggests an overbought condition. In this scenario, we'll avoid a short position due to the overall upward trend. This combined strategy, blending RSI signals with Bollinger Bands and support/resistance levels, offers a balanced approach to maximize returns while managing risk. Based on the historical data and forecast, Jupiter shows a volatile trend with periods of both upward and downward momentum. The RSI fluctuates between 42 and 54, indicating neither consistently overbought nor oversold conditions. However, the recent dip in RSI to 42.1 on August 22 suggests a potential oversold condition, while the forecast indicates a slight upward trend with prices hovering around 0.502 to 0.517. Considering the Bollinger Bands, the price has frequently touched the upper and lower bands, suggesting high volatility. Therefore, I recommend a strategy that combines RSI and Bollinger Bands for a balanced approach. My strategy involves a long position when the RSI falls below 40 and the price touches the lower Bollinger Band, and a short position when the RSI rises above 70 and the price touches the upper Bollinger Band. For the current situation, the RSI is 49.4 on August 28, and the price is near the center of the Bollinger Bands. Let's initiate a long position with an entry price of $0.498. We will set a stop loss at the support price of $0.458 to limit potential losses. The target price will be set at $0.538, the resistance price, aiming for a moderate profit. This strategy combines the oversold signal from the RSI and the volatility indicated by the Bollinger Bands, offering a high probability trading opportunity with clearly defined risk and reward parameters. Based on the historical data and forecast, Ethena has shown considerable volatility with a recent downtrend. The support price consistently remains at $0.61, while the resistance fluctuates around $0.74. The RSI indicates that the asset is currently in the neutral to slightly oversold territory, hovering around 50 to 60. The Bollinger Bands suggest that the price is approaching the lower band, indicating a potential oversold condition. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to capitalize on potential rebounds. My recommended strategy is to implement a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Specifically, enter a long position at $0.637, placing a stop-loss order at $0.61 to protect against further downside risk. The target price for this trade is set at $0.74, aiming to capture a significant portion of the recent resistance level. This strategy aims to benefit from a potential bounce as the asset becomes oversold, with a clear exit strategy defined by both a stop-loss and a target price. This strategy has a high probability of achieving high returns. Based on the historical data and forecast, flow shows a slight upward trend, but with considerable volatility. The RSI fluctuates between 44.3 and 61.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased price volatility. Considering the support price of $0.425 and the resistance price of $0.469, I propose a strategy combining RSI and Bollinger Bands to capitalize on short-term price movements. My recommendation is to implement a combined strategy with an entry price of $0.404+, a stop-loss price of $0.395+, and a target price of $0.421+. When the RSI falls below 30, indicating an oversold condition, enter a long position at $0.404+. Set a stop-loss just below the lower Bollinger Band at $0.395+, to protect against unexpected downturns. If the price reaches the upper Bollinger Band or the RSI reaches 70, indicating an overbought condition, take profit at $0.421+. This strategy aims to capture short-term gains by leveraging the momentum indicated by the RSI and the volatility defined by the Bollinger Bands, while incorporating support and resistance levels for added risk management. Based on the historical data and forecast, Conflux shows a fluctuating trend with recent upward momentum. The support price consistently remains at $0.17, while the resistance is at $0.206. The RSI has been oscillating around the 50 level, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a continued upward trajectory, with prices potentially reaching $0.199. Considering this, I recommend a moderately bullish strategy. We will employ a combination of RSI and Bollinger Band signals. The entry price will be $0.18, coinciding with a slight pullback after the recent price increase and a favorable position relative to the support level. The stop loss will be set at $0.173, just below the support level, to mitigate potential losses if the price reverses. The initial target price will be $0.195, aligning with the forecast price and a reasonable profit margin. To refine the strategy, we'll incorporate Bollinger Bands. If the price touches the bottom band around $0.159, it signals a potential oversold condition, prompting a buy. Conversely, if the price reaches the top band around $0.233, it suggests an overbought condition, indicating a potential sell. The final portfolio will prioritize the upward trend and forecast, with a secondary consideration for Bollinger Bands confirmation. The revised target price will be $0.197, reflecting the highest forecast price. This blended strategy aims to capitalize on the anticipated upward movement while incorporating risk management measures to protect against adverse price fluctuations. Based on the historical data and forecast, PYTH network shows a clear upward trend. The RSI has been fluctuating, but recently crossed above 70 on August 28, indicating an overbought condition. However, the forecast prices for the next week predict a continued upward trajectory, reaching $0.208 by September 4, 2025. Considering the support price of $0.204 and the recent overbought signal, a strategic approach would be to initiate a long position with an entry price of $0.153 on August 29, 2025. A stop loss should be placed at $0.14, just below the lower Bollinger Band to protect against a potential pullback. The target price for this trade is set at $0.208, aligning with the forecast price and providing a reasonable profit margin. To further refine the strategy, we can incorporate the Bollinger Bands. The price has been consistently trading within the bands, and a breakout above the upper band could signal further upward momentum. We'll use this as confirmation. If the price breaks above $0.153, we'll increase our position. If the price falls below $0.14, we'll exit the position. This approach combines technical indicators and forecast data to maximize potential returns while managing risk effectively. The final portfolio would be a long position with an entry price of $0.153, a stop loss at $0.14, and a target price of $0.208.